Hey, as I shoot some man's. Okay, is this thing live? There we go. Alright. Hey, what's up, guys? Just here to do the live and answer the questions that I've been receiving quite a lot, often about property, about our personal finances. At some point, I'm sure we all have wanted to own a property or want to own a property in the future. And yeah, man, I think it's a very important investment that we should all be looking to make in our lives at some point in our lives. So welcome, guys. What's up, everyone? Hope everyone is good this evening. And I was actually supposed to do this live yesterday, but yeah, I got a bit distracted. It was a friend's birthday, but here I am today, and I'm here to answer all the property questions. So feel free to drop your questions in the comments, and I'll be also going through those questions. If you have any questions relating to property, your personal finance, or whatever, I'll be answering all those questions. I can see there's a few waves in the comments already. Hi guys, what's up? I can see socks 031. Drop your questions, guys. Drop your questions in the comment section, and I'll be answering them. So let me go. In the meantime, someone asked, what is an offer to purchase and is it binding? So an offer to purchase, in essence, an offer to purchase is an agreement that you sign when you are purchasing a property. So if you're looking to make any kind of purchase in property, you will need to sign an offer to purchase. And that offer to purchase is binding. You can't just exit because you don't like the property anymore, or maybe you found another property that you now like. An offer to purchase is binding. It's a binding document. And if you do wish to exit the agreement, you can exit the agreement. However, there will be penalties that you need to pay, and I don't honestly believe it's worth it. So let me make an example. If you want to buy a house and then you sign the offer to purchase, and then a week later you find another house that you like, and now you don't want that one, now you want this one, and you want to get out of that agreement, what's going to happen is the agent you're still going to be due to pay the agent's commission, because the agent has now earned a commission and you want to pull out of the deal. So the agent is going to sue you for the commission that they would have earned on the deal. The lawyers are going to want any wastage costs that they have incurred. And then the seller of the house, if they are unable to sell it, or if they have to now drop their price even lower to sell it, they can sue you either for the difference or for the entire value of the house. So you should make sure that when you sign that document, you are 100% sure that this is the house you want. You're convinced, because if you do sign it, the repercussions after that can be a lot, can be very taxing, and you don't want to put yourself through that, especially if you're trying to buy a house. Do your proper due diligence when you are trying to buy a home, whether for investments or as a house that you intend on living in, because as mentioned, the offer to purchase is a binding document, right? So another question I received was, what is the best way to get started? So if you want to get started in property, I'd say the first thing you should do is pick up a book and read a book on property, any book. It really doesn't matter, because you clearly don't have a holistic understanding of the property market. I'm assuming this is for investment purposes. So you should have a general understanding, some sort of understanding before you dive right in. And if you have a mentor or someone who you can look up to, someone who you know who's bought a property or who is investing in property, you should definitely consult with them as much as you can. This is where guidance from people who've done things you haven't done will come in handy. You don't want to make stupid mistakes that could be avoided just because you don't want to ask, right? So get a mentor, get someone to assist you in getting started, read a book, do something, view as many properties as you can. Definitely what you shouldn't do is go out there, look for a house, think it's going to rent out, and then buy it, and then try rent it, then find out that, hey, actually this house, what I thought it's going to rent for, it's not going to rent for that. And so many other things that you might not have considered, right? So let me just go through the questions. I saw a few questions pop up. Which houses are cheaper, the bank houses or the auctioned houses? So when a bank lists a property, when an agent lists a property on behalf of the bank, they don't necessarily list the house at a significantly cheaper price, or auctioned houses, because I can see people have the general misconception that houses that are repossessed are going to be sold significantly cheaper than a normal house. I don't think that this is the case. From what I've seen and what I've heard, it's not the case, because what happens is the bank has now repossessed the house. So if they've repossessed it, they're going to try profit from the house as much as they can. So why would they sell a house for, let's say it's worth R1,000,000, why would they sell it for 500,000 rands just because the outstanding debt on the house was 500,000 rands? It makes no sense. At the end of the day, the bank is a business, and the bank is trying to make money all the time. So they will list the house at R1,000,000, or maybe they might list it slightly lower than R1,000,000, but the room for negotiation is there. In everything, there is negotiation. If you don't negotiate in property, then you've made a big mistake. So yeah, I'd like to know, when it comes to marketing side of things, maybe when letting your property or selling it, do I have to budget for it, or there's a cheaper way of doing it? Well, if you're going to market the house yourself, Lutuli, if you're going to market the house yourself, you're definitely going to need a marketing budget. Otherwise, how are you going to advertise for it, unless you're just going to post on free platforms? But you're not going to obviously get the reach that you could potentially get if you do paid advertising. And if you get an agent, that way you don't actually incur any costs in the immediate term. However, you're going to need to pay them their agent's commission, which comes off the total sales price of the house. So if the house, let's say, is selling for 500,000 rands, and the agent is going to take a 5% commission, so whatever 5% of 500,000 rands is, that will be their commission. So that's what you essentially would have paid for the transaction to go through. Yeah, so what is an important factor in buying property? What costs should we be prepared for? And on the other hand, I don't know what you're saying, Socks, but I can hear the first part of what you're saying. So the costs you need to prepare for, firstly, when you're buying a property, is the transfer costs. Transfer costs, transfer duty, and bond registration costs. So bond registration costs are only applicable if you are registering a bond. And if you're not registering a bond and you're buying cash, then those costs won't be applicable. Transfer costs will be applicable at all times, because that's the fee that's going to the lawyers. And that's the fee that's going to the lawyers to facilitate the whole transaction. And then transfer duty is only applicable on houses that are being purchased over R1,000,000. Yeah, the threshold has been increased to R1,000,000. So if your house is over R1,000,000, then you'll need to pay that transfer duty. And so those are essentially the costs that you need to pay from upfront. Sometimes you can capitalize these costs, such as the bond registration costs. However, you cannot capitalize the transfer duty onto your bond, and you can't capitalize the transfer costs that are going to the lawyers as well. So yeah, so if a bank is saying they're going to give you 105, 110% loan, they're basically saying they're going to capitalize their bond registration costs. Hey, so I want to know, how do I go about starting my property portfolio on student accommodation, as I see there's a massive gap in student accommodation, as I'm a student as well. So in student accommodation, if you want to get started, you need to firstly understand the risks that are associated with owning a student accommodation. Firstly, understand that students, as you are students, you know student behavior. So are you ready for that emotional journey? Are you ready for that financial journey of potential damages as well? That's something you need to understand. Then know what area you want to work in. I'm assuming if you're a student and you're asking this question, you already figured that part out. So you already know that. And are you looking at it from a perspective of a commune or are you looking at it from a perspective of an apartment that you want to purchase? So understand what type of student accommodation you need to get into, understand the risks that are associated with having a student accommodation, and then lastly, it will be purchasing it. How are you going to finance it? Are you going to use bank financing? Are you drawing up a business plan, hoping to get investors? And guys, you can get property investors at seminars, webinars. There are always people who are looking for new juicy deals, who have money. So if you don't have money and you actually wanna, if you wanna invest in property, you can go through working with investors where you find the deal, facilitate the deal, and you split the profits 50-50. So things like that happen all the time, and you can find investors on Facebook groups, can find investors at webinars, seminars, and as soon as you enter that community, you'll notice that people know each other, and like it genuinely is a community of property investors, and it's a small world. So yeah, that's what I would say. Please make this live available in your page. I will do that if the technology allows me. I've never tried, but hey, I'll try to figure it out. Is it true that when you're a first-time buyer, you don't really have to pay transfer costs? That is not true. No, Patrick. Transfer costs are going to the lawyers. The lawyers are not going to do the transfer for you for free. They might give you a discount maybe if you are a first-time buyer, because I know the lawyers that I use, Songezo, Songezo is the name of the law firm that I use. If you are first-time home buyer, then you will qualify for a discount on the transfer costs. However, they will not do it for you for free, because wow, they have no incentive to do that for free. At the end of the day, the law firm is a business. They're not out here doing charity work. So nope, that is not true to my knowledge. How can you minimize tax in the rental business? Well, I'm not a tax practitioner, so I'm not qualified to give you any tax advice. However, I can say if you are looking for tax advice, speak to a tax practitioner. Have a look at also Section 11A of the Income Tax Act. And what is that section, Timber? I think I saw you in the live. Section 13.6. Yes, there's Section 13.6 as well in the Income Tax Act that gives you a deduction for owning property, and if you're running it as a rental business for residential purposes. There's a lot of requirements that you need to meet, and yeah, so I'm not sure of any other tax benefits. And then obviously if you are renting it out and you have a bond on it, the interest portion of your bond payment is tax deductible. That's Section 24J of the Income Tax Act. So yeah, usually say you don't need money to start a property business, but you just mentioned transfer costs and bond costs. Yeah, so okay, if you want to start out in property, you don't necessarily need money to start out in property. And if you join my webinar, you'll see how I explain why and how. So I think if you want to know more about that, then definitely you should sign up for my webinar. My webinar is going to be on the 20th of August. The link is in my bio. So I think that question will be better answered there, because I'm going to have an entire webinar on it. This session will be mainly to just answer a few questions that I've been receiving. What's the best way to negotiate for a good deal? What do you mean? What's the best way to negotiate for a good deal? It depends on the property. So you need to look at the property itself. What are the features of the property that could potentially help you in your negotiation? Is the property in good condition? Because if the property is in good condition, then your room for negotiation will be much smaller as compared to if the property has damage. If the property is damaged, broken windows, not painted, broken doors, things like that, then you can negotiate a better price. But if the property is in good condition, then your room for negotiation really is slim. So yeah, Tobe, hey, do you have any books you would recommend for property for beginners? Hey Tobs, I would say there's a book by the books written by Jason Lee. I think those are pretty good books, and they're applicable very much to South Africa. He's a South African author. So definitely head into reading his books, because sometimes you'll read books written by authors outside of our country, and some of the things aren't necessarily applicable. So I'd say if you are looking to start investing in South Africa and property, definitely have a look at Jason Lee's books, because even the reference to legislation that he makes is specific to South Africa. Even if you're buying a house that is a new development, I'll have to pay transfer costs. Oh, okay, Patrick. I see what you're saying. If you're speaking about developments, I do know that new developments do say that there's no transfer cost that need to be paid. I thought you were speaking about just a normal house. How would you go about looking for property investment purchasing, given I'm only 19? Hey. So your age is not a factor as to whether you can find a property investment or not. Mostly, I would recommend that you sign up for my webinar, and I'll show you exactly how, because I'm assuming you're at the age of 19, you don't have a lot of money. I'm not sure if you're working or you're a student, but you're likely not to have a lot of money at that stage. Sign up for my webinar and you'll see exactly how I can show you how to make money in property without having a lot of money. But if you are looking to invest at that age, at whatever age, I'd always recommend that you start educating yourself around property investing and property investments in general, so that you have a holistic understanding, and then you can decide what strategy you wish to follow. Because having the mindset of I'm going to buy a house and rent it out, that is too narrow-minded, I believe. There's many strategies in property, and if you think that you're just going to buy a house and rent it out and that's all you're thinking about, and you're not really open-minded to other possibilities, then you're limiting your potential. So as a startup, is flipping property better than rentals? Yes, I do believe that flipping property is better than renting out, especially if you are starting out, because as much as you don't need a lot of money to start out on property, but if you do want to grow your property portfolio, you will need cash injection, you will need capital, and if you have money which you can get from flipping property and making quick profits, then that will help your journey. Let me actually go through some of the other questions that I received during the week. So someone asked me about buying. Is it better to buy, or is it better to build, or is it better to purchase from a development? So there are benefits and there are advantages and disadvantages to all of it. And I'm not going to go outright and say this is the best option, but things you need to consider is that when you are building, it is a time-consuming process. There are a lot of building requirements you'll need to meet. Are your builders reliable? It's an emotional journey. It's more of an emotional journey than buying, definitely, because you see your house being built from scratch. You're likely to visit the site quite often. The excitement. I've actually heard of a few cases where the builders fucked it up, and let's just hope that you get a reputable builder who's not going to do that. But building generally can be cheaper than if you are purchasing a home. So there are, as I mentioned, advantages and disadvantages to building and buying. And then at developments, a new development, personally what I've seen is that new developments are slightly overpriced, and the room for negotiation with new developments they're not really flexible on their prices. I'm not sure about now during this pandemic, maybe they might be a bit flexible, but new developments tend to not be flexible on the prices as compared to a house where you can purchase it and negotiate a price on the house. Let's keep it going. Drop me more questions, guys, in the comments, and I'm gonna head to the comments just now. I just want to answer this last question that I have here. So how do I analyze a property deal? The first thing I'd say is look at the numbers. One of the most important things is looking at the numbers. Are you making a profit on a monthly basis, or are you not? Look at all your costs holistically. So you look at your bond costs, if you have a bond attached to it, any levies, any rates and taxes. Prepare for future repairs and maintenance. Vacancy, you can prepare for that as well by taking a small percentage of your rental income and putting it aside for when you don't have a tenant. taking a small percentage of your rental income, putting it aside for future repairs and maintenance. Because if you are owning a property, you are going to need to paint it every now and then, replace the roof after 10-15 years. You'll need to do repairs and maintenance here and there for whatever damage the tenants have made, and maybe sometimes that damage is beyond the deposits that you actually received. So prepare yourself for any and all potential negative things that could happen to your property, so that you don't find yourself in a situation where you own a property and it's a burden. So look at the quantitative analysis. After that, look at the area and the type of tenants that you're expecting to have. As much as the numbers might make sense, sometimes you just need to look at the type of tenants you're going to have. What are the chances that they're not going to pay? What type of area is it? So I can't really be specific here because every area in South Africa differs. So you just need to make sure that in this area you are comfortable and you know it, which is why I'd prefer, if you were to invest in property, invest firstly in an area that you know and understand, even in an area that you grew up in, because then you'll understand the type of people that live there and what generally happens, the crime. Is there a lot of crime? Is there not a lot of crime? And then you can start venturing out into different areas. Thank you. What is to refinance? So refinancing, Nombi, is when you own a property and you have a bond attached to that property. So when you own a property and you have a loan attached to the property, let's say you purchased it for 500,000 rands, and then it's a property that's in a bad condition, you fix it up a bit, and after a few years you go to the bank and you say, hey bank, listen, I want to refinance my property. And you have equity within that property. So let's say after a few years, your property is worth 700,000 rands. Assuming that you bought it in a bad condition and over the years, you've been fixing it up, making it in top-notch condition. And when the bank comes, they appraise your property for 700,000 rands. So you see that you have equity, which is the difference between what the bank is saying your property is worth and whatever you owe the bank. So after a few years, you won't owe 500,000 rands anymore. You'll owe less. So let's say, 400,000. So now you have 300,000 rands in equity, and you can pull out that equity in the form of a refinance. So you refinance by pulling out that equity, and you can either put it down as a deposit for a new property, which would be a better decision to do than to go buy a new car. Or whatever you could do. So the result of that is your bond now moves back to 700,000. Now your bond becomes 700,000 instead of what it was before, which is 400,000. There are risks associated with refinancing, but at the same time, there are a lot of benefits. I'm not going to go through those right now. Maybe I could make a separate video about the benefits to refinancing, because it is a good way to grow your property portfolio. And that additional loan amounts that you get, yes, you'll be charged interest on it, but as I mentioned before, all of that interest is likely to be tax deductible. So there's a lot of benefits and disadvantages to both. So have a look at that for yourself. Would you advise one to use 500,000 from their retirement lump sum to invest in property, buy to rent? We're talking about a 65-year-old pensioner. Sure. Okay, so if you're 65 years old, taking out your retirement, I'm not sure, hey? This is a very difficult question. How are they going to be receiving their lump sum? Are they receiving that 500,000 rands as an annuity coming on a monthly basis, or are they receiving it completely as a lump sum? Because there are different implications when you take out your money for tax purposes, when you are taking out your money. But since they're at retirement age, it shouldn't be a train smash. But you should also look at the return that they're expecting to make from that 500,000 rands. If they're receiving it in the form of an annuity, let's say it's 5,000 rands a month, or do they want to risk it and buy a property and then rent it out and use that money as rent to live on. So I'm not sure on the specific situation is as in like, are they intending to live off that money, or is it just additional funds that they have and they have other funds that they live off? So that's a very that would be a very complicated situation, considering that the person is 65 years old. I don't know how much energy they have for owning a property, because owning a property can be a headache sometimes if you have crappy tenants, if you have a shitty estate agent as well, because that's a possibility. So it really does depend on the individual. I'm not 65, I'm nowhere close to there, so I can't give a complete answer that side. Where can I invest in property without actually buying a house? Without actually buying a house, there's a video that I posted on my YouTube channel, Nhlakanipho, where I spoke about how to invest in property without any money, using a lease option agreement. So it's like a rent to buy, basically. You rent a house and you enter into a rent to buy agreement, and then you re-rent that house to someone else for a profit. You don't actually own the house. You just benefiting from the difference between what you pay to the owner at that time and what the tenant is paying you. I'm not sure if what I just said makes sense. If it doesn't, please check out the video on my YouTube channel. I do go into much deeper details, like 15 minutes long, just on that. So that's a strategy you could use, and you could also you could sell deals. So if you want to invest in so investors are looking for investing opportunities. So if you can find them investing opportunities and sell them those investing opportunities for a fee, then you can make money. It's called deal sourcing. You basically find the deal and you say, hey, property investor, this is the deal. These are the numbers on the deal. Are you interested? Do you like it? If they say yes, they pay you 5,000 rands or whatever you guys agree on. Then they take the deal and buy the property. That's another way you could also make some money in property. How else could you make money in property? You could actually make money also through referrals. So estate agents are always selling houses or renting houses out to other people. So if you want to benefit, so let's say you have a friend who's moving out of their apartment, and you want to make some money and potentially even share it with your friend. I think that's a bit unethical, but whatever. So what you could do is help them find a place to stay. And then once you've found a place for them to stay that they're happy with, then you go to the estate agents and say, hey, estate agents, I have a guy who wants to move into this area. Are you willing to pay me a referral fee for finding you this person? They'll say yes, and then you could get paid like 2,000 rands, for example, as a referral fee, or 1,000 rands. I don't know. Depends on what you guys agree on. So you could do that with the renting of a house, and you could do that with the sale of a house as well. You refer someone for a house that is up for sale, and that person buys the house, then you could share in the commission that the agent is going to get. And with sales, it's going to be much larger amounts as compared to with rentals, because people rent for 6,000 rands a month, and people sell property and buy property for hundreds of thousands, and the commissions in property are very big. So let's do a quick calculation. Let's say you find them a house for 1.5 million, and the agent's commission is 7%. Which is not outrageous. That agent is likely getting 105,000 rands in commission. It's not going to completely all go to them. It's likely going to go to their principal and all of that. But maybe you could negotiate a finder's fee of 5,000 rands out of that 105,000 rand. And then, you could make some money from that. Which platform can I use to invest in property without buying property? Easy Equities. I think they have Easy Properties. If you're looking for an investing platform, so that's a platform you could use. When is the webinar date? The webinar is on the 20th of August. You can sign up with the link in my bio. The webinar, 20th of August at 6 p.m. And just check your spam and your promotions folder as well for the email. You'll receive an email with the link, with the Zoom link. So some people have been telling me that they don't see it. but definitely it's in your spam or your promotions folder. So just check that out. And then I just tried signing up for a webinar, but it says my email is incorrect. I I can't help you if your email is incorrect. It's a system it's a system, right? So if it's not accepting your email, then maybe there's something incorrect that you're putting in. I'm not saying that you're not putting in your email correctly, but maybe try a different email address. Hello, Coqueto. What's up? How does a BSc degree in real estate benefits you in property investments? I don't know. I don't have a BSc degree, so I'm not sure. I don't know. BSc is it business science, or are you speaking about the other science that has to do with like bio what? I'm not sure. I really don't know. Okay, let's keep it going, guys. I like these questions. Let's keep it going. Next up is, what beginners books or short courses would you recommend for an amateur in property investing? As I mentioned before, if you're in South Africa, I'd recommend that you read Jason Lee's books. Start from Jason Lee. His books are very informative, and not only that, they're applicable directly to South Africa. So have a look at his books. Yeah. And any courses, short courses, I can't think of any courses right now off the top of my head. I've done so many. I really can't think of any courses off the top of my head right now. Sorry. But join my free webinar, man. Join my webinar on the 20th of August. Maybe by then I'll try share something in that webinar if I do remember. Hello. Hey. Please explain on wholesaling real estate after, please. So wholesaling real estate is basically what my coaching and mentoring program is all about. If you join the webinar, as I mentioned, I will be explaining how to flip / wholesale real estate. It's basically when you sign an offer to purchase, and you sign an offer to purchase, and then you flip that offer to purchase to someone else for a profit, taking the profits in between, right? So find seller, sign offer to purchase, flip the contract to another person with no money, don't need money, never went to the bank, take a profit of 50, 100,000 rands, depending on what your margins are, and then you make some money. That's how wholesaling works, and that's what I will be teaching in my coaching and mentoring program. I have a few students who I've taken in already, and if you joined my previous webinar, you would have seen that Katleho just made 65,000 rands on her first wholesaling deal, or back-to-back deal, whatever you want to call it. She just made 65,000 rands on her first deal, so definitely join the webinar. Vukins. Okay, you want to join me? Am I married? I am not married. What other costs should you expect? Okay, actually, let me accept this. Boom. All right. What other costs should you expect to pay besides the price? Hello? How? Ngafika request bese uyaphuma. Hi, okay. Bachelor of Science. Sorry, I really can't help you. I can't help you in that regard. I don't know how a Bachelor of Science could help you. So what other costs should you expect to pay besides the price of the property when buying a property? Okay. Oh, so you mean like except for the price of the property? I'm assuming you're joining a bit late. So the other costs you'll incur will be transfer duty if the property is over R1 million, transfer costs, and bond registration costs if you are using bond financing through a bank, and if you're not, then there won't be any bank registration costs. What books would you recommend for someone who wants to start learning on property? Okay, I think I've been asked this question already. So yeah, so that's what's up, guys. I'm assuming there's no more questions. Actually, I had one more that I didn't address that was here. Let me check that out. Is it true that you can't get blacklisted? Someone asked me that. Yes, it is true. You can't get blacklisted. There is no such thing as blacklisting. It has not existed in the national credit regulators' vocabulary since like 2011, if I'm not mistaken. So there's no such thing as blacklisting. It's just a term that is still thrown around and used by financial institutions to try coerce you and convince you to pay off your debts. But in reality, they can't blacklist you. However, that does not mean that you shouldn't pay off your debts, because you can still have a horrible credit record, and you can still like have judgments against your name, which will prevent you from obtaining financing, because who's going to want to give you a loan when you have judgments on your name? So they can't blacklist you, but there are measures in place to basically prevent you still from obtaining financing. But yeah, so that's it. That's the question about blacklisting. And then someone asked me, okay, is it true that how do I analyze a property deal? I think I already answered that. I don't have money, but I want to start. Can you please coach me? So someone, if you are looking for coaching, guys, please head over to my website and see the details there. I am ntombela.co.za. So that answers the coaching question. And about how do you get started without any money? I think I answered this as well a bit earlier, where I mentioned that if you just inject the knowledge on different property investing strategies, which you'll get by reading books. If you do look at Jason Lee's books, then I think he does mention some strategies in his books as well. And in my webinar, I'll be mentioning a wholesaling strategy known as back-to-back deals as well. What else can I say? How do you get started? Yeah, that's how you get started, guys, because if you don't have money in property, you need to be creative. So property is it is a game where it needs money. But if you don't have money, you can work around it by being creative. It needs a bit more effort, but it is just a matter of being creative and educating yourself and knowing those different strategies. So that's what I would say. If you do have money, much easier, but it doesn't mean you can't fuck it up either, because you can't just dump your money into a property and expect to make a profit. So yeah, I think, what questions should I ask a banker to start my property portfolio? How old are you? How old am I? Take a guess. Take a guess. How old am I? Okay. So in terms of asking your banker if you want to start a property portfolio, just get pre-qualified. Ask your banker how much do you qualify for. And then firstly, when they tell you qualify for 600,000, don't go buy a house for 600,000. Give yourself some buffer. Go buy a house for like 500,000, so that you have that room in case interest rates do their own thing. As we see, they're going down, 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 but they're not going to realistically stay at this low level forever. So just prepare yourself for that. If you qualify for 600,000, just buy a little at a bit less than 600,000, I would say. But asking your banker, there's no questions you need to ask your banker, I would say, besides what are they looking for from you? What do you need to prove to them to get as much money as you can out of them? And it's things like having a good credit record. It's things like, do you have employment? Is it secure? If you don't have if you have your own business, do you have financial statements for your business, or do you pay yourself a salary? You should ask your banker questions that are basically saying, how can I get the most money out of this bank? And then they will tell you. They have no reason not to give you the best strategies and best ways in which you can get as much money out of the bank as possible, because the bank is in the business of giving loans. And if I'm not mistaken, they get paid commission based on the number of loans they can give out. So yeah, it's in their best interest to help you out in that regard. So ask them, what are the best things that I can do to try improve and get a bigger loan from FNB, Absa, Capitec, whatever it is, whatever your bank is. I guess that's it, guys. Yeah, thank you very much for joining me for the live today. And I think I'll start doing a lot more of these more often. Try to do them maybe weekly. We'll see how it goes. But yeah, feel free to sign up to my webinar that's coming up on the 20th of August. It's going to be at 6 o'clock. And the link is in my bio. So do that. And yeah, cheers up.